Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we are looking for a finished three-wave structure to the downside in an ABC zigzag. In this scenario, you want price to move towards the upside and touch the 0.618 that I have on my chart at 59.5k, taken from the end of B to the end of wave C. The reason you want to move up and touch 59.5k is because it invalidates a wave 4 in a bearish scenario 1, 2, 3, 4, 5, increasing the probabilities for this to be a three-wave structure in an ABC, and therefore it increases the probabilities to at a later stage still take out this high. I say at a later stage because preferably you actually end a bigger corrective structure after the 0.382 fib time, sitting on today, the 16th of September, 6 p.m. Central European Time, as the probabilities have increased that this is a finished structure to the upside, either corrective or impulsive, but therefore you would like to see a new structure to the downside here, finishing at least after the 382, which as you can see, it hasn't done. So even if price would move towards the upside and takes out the 618 here at 59.5, yes, the probabilities overall will increase to sooner or later then take out this high. However, we have to be aware of a bigger three-wave structure. Think about double zigzag, think about a flat structure, or potentially, of course, WXYs. It doesn't matter. It is too early to talk about what corrective structure we then might get, right? Because an ABC zigzag can be part of many corrective structures, so therefore it is a lot more interesting to keep an eye on the new move, the local structure to the upside. If we then look at the bearish scenario, then here we are looking for an impulse to the downside. Wave 1, 2, 3, 4, 5. Common target for your wave 4 is between the 236 and the 0.5 Fibonacci, taken from the start to the end of wave 3, giving you a target between 58.6 and 59.2k. The invalidation is that 618 at 59.5k. In this scenario, you want price to take out the low of wave 3 before touching the 618 to look for a wave 5. Now what we prefer to see in an impulse is a wave 4, wave 5, and wave 5 is made on a lower amount of volume. That is by far most common. The moment volume increases as price is moving to the downside, there is the potential for further continuation to the downside. Now also you can see that wave 3 here touched the 2 trend-based fib extension, taken from the start to the end of 1 to the end of wave 2. Now, a 1.618 trend-based fib extension is a minimum target, generally for a wave 3, and it is still a target for a wave C as well. The 2 extension over here is also still perfectly fine for a wave 3, but it does slowly start to reduce probabilities for a wave C, as it is quite extended for C. Now it is crypto, it is Bitcoin. We have seen wave C's extend to much further than a 2 extension, but from a probabilities perspective, it usually fits better with a 3 compared to a C. Now, if we then look at the base channel here, if we're looking for an impulse to the downside, then this base channel is taken from the start of 1 to the end of 2 to the end of 1. And what you like to see in this channel is a wave 3 break out of the channel, wave 4 to come back to the channel, and then eventually a wave 5 to the downside, of course without hitting the 618 for wave 4. Now we moved out of the channel, as you can see, so preferably in this wave 4, we then continue ranging sideways. Also, we like to see this wave 4 finish at least after the 0.382, which is sitting on today, 16th of September, 3 p.m. Central European Time. So even if price would move to the upside here, maybe hits the channel and then starts moving to the downside, preferably we look for a longer sideways corrective structure in 4 to finish after the 382 before a drop to the downside. Now then we have a trend channel. Trend channel is taken from the end of 1 to the end of 3 to the end of 2. And what you look for here is price to break out of the trend channel, break this upper trend line. And the moment price moves out of this channel and breaks this upper trend line without, of course, touching the 618, the probabilities increase that we are looking here for a wave 4. And then a wave 1, 2, 3, bigger sideways structure. Oh, we break out, cool. Higher probabilities for a 4, and then look for a wave 5 towards the downside. If price starts ranging sideways here but doesn't break this trend line, there's always the risk of a potential double 1-2, which is then 1-2, 1-2, and then you get a bigger wave 3 towards the downside, which is what I meant with volume increasing if price does take out the low. Lower price is expected in that case. If we go to the 4-hour time frame, then this is the volume profile. Now we passed the point of control of the volume profile here since 49k, acted as support, but then eventually it failed to hold. Now what is interesting is that over here on the chart, I didn't really have anything in particular, right? I mean, we have the point of control here and the value area high at 61.5k. And if I turn on all of my levels, then this daily is brand new, which was after this high was made, right? So didn't really have any significant area of resistance. And as you know, for the people that have been here for a while, my levels and boxes are generally very, very well respected and are important turnaround areas, just like we saw here at the low as well as here at the high. So the fact that price did not actually really hit anything special, like yeah, we hit the golden pocket, right? That's something. We hit the golden pocket from the high to the low, right, as you can see, and that is where we are rejecting. But it's not like a great area of significant confluence that I had there besides the golden pocket. So I do still keep an eye on also the point of control here above us, as well as the value area high here at 61.5, which is an interesting area of a confluence here. As you can see, we have that blue box, 61.4 to 61.8k. To the downside, we here have 57.5 to 57.7k, including also a brand new weekly naked point of control. Always interesting area of support. If we then look at the CVD divergences, then a price over here has dropped to the downside and now created bullish CVD divergences with the low over here. Now, as price was moving to the upside, higher highs and higher lows here, it consistently created bullish CVD divergences, which have already played out. But I do keep an eye on the 4-hour bullish CVD divergence because of the bullish CVD divergence we had locally. Initially, this bullish CVD is not interesting with the drop, but as you then see strength locally with bullish CVDs, the probabilities do increase for this bigger bullish CVD, with the target being 65k. And I don't really like to bet against such bullish CVD divergences, and also price moving down here, bullish CVDs once again. We don't see any bearish CVDs. So if I go to my CVD chart, then here on a 5-minute, we had a small little bullish CVD here. But if we go to the 4-hour time frame, right, and I zoom out, then what you can see here is the green dotted line, that's your bullish CVD. And then locally here again, you see the question mark. We have once more a bigger bullish CVD here locally. Of course, we have space to drop to the downside, right, before it's invalidated. You would need to take 52k here, the low. But you do again have a bullish CVD. We don't have any bearish CVDs locally. And on a 15-minute time frame, right, also over here, you can currently see on the chart that there's no bearish CVDs on the chart. And on the 5-minute, we had a small little bullish CVD here, which already played out. On the 5-minute, we do see here a little bearish CVD on the chart appearing as well. But this is like a 5-minute, right? You would like to see that significantly on a 15-minute time frame, or maybe even a 1-hour time frame. So this is something I do keep in mind with my risk management for both longs as well as shorts, of course. Now then, looking at the news, we do have some news this week on a Tuesday as well as on Wednesday. You can see a Tuesday, which is tomorrow, 2:30 p.m. Central European time, and then on Wednesday, 2:30 p.m., 8 p.m. and 8:30 p.m. Now, it can increase the volatility on the chart, so just make sure that you trade safe. So if we then finally look at the probabilities of the different scenarios, then on the 1-hour time frame, which is the price action over here, the probabilities are higher to look for either an impulse or a bigger corrective structure to finish after the 382 fib time. In both cases, preferably still looking for a bit lower. But of course, keep this in mind. You gotta know where probabilities change, right? So know how probabilities change as price is in limbo between the impulse / the ABC. Hit the 618 before a low, probabilities are higher. The move down here is an ABC, which increases probabilities to take out the 60.7K high at a later stage. Mindful of a bigger correction to finish after the 382. If you do have a finished ABC here, we do know that the 382 fib time has not yet been reached. Preferably we do. So at least we got to be aware of a potential bigger corrective structure, of course. But by all means, the probabilities are higher to still take out this high if you do hit the 618 before taking out the low, right? That's the probabilities change. Now take out the local low before hitting the 618. So take out this low before hitting the 618 and probabilities increase for an impulse to the downside. 1, 2, 3, 4, 5 wave structure. And the next retracement to then be a wave B or a wave 2, right? And then look for another leg down in a wave C or a wave 3. On the 4-hour time frame, which is the time frame that I'm at the moment, I am very aware of the bullish CVDs that we have going on here. So far, we don't see big bearish CVD divergences as price here was moving to the upside. Wouldn't really bet against the bigger bullish CVDs. However, one does want to also see local strength, right? Yes, we have the 4-hour bullish CVD here, but honestly, right, as interesting as it sounds, we have a price moving to the downside here locally. I want to see on the lower time frames, right, bullish CVDs building as well. Yes, we had that 5-minute small little bullish CVD that played out, and now we have a 5-minute small little bearish CVD, but that's like 5-minute stuff, right? What I want to see on the 15-minute time frame, for example, is price creating structure to the upside for the bulls with consistent new, fresh, local bullish CVD divergences. And same is true for the bears, right? Same is true for the bears. You want to see structure continue to the downside, but then have bearish CVDs coming in as well. So far, we did see consistent bullish CVDs since the 52K low as price is moving to the upside supporting the bull. So it's just something that I keep in mind, as mentioned earlier, with my risk management for both shorts as well as longs. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.